All right, hello everybody. Today we will be talking about Palantir. Now, I honestly don't know much about the company, but they have been on an absolute tear recently. A couple days ago, or maybe a week or two ago, they were up like 40% or more. They are only up more since. It's crazy stock growth in the past year or so, just nonstop growing. So, we're going to get into it, look at their recent reports, look at their chart, look at their financials, and that's it. So make sure to subscribe and let's get into it. So before we get into their financials, there's really only one thing you need to see with Palantir, and that is this chart. Beginning of 2023, they were right around $6 a share. They have 10x that in basically a year or two, 2 years. So that is pretty insane growth. But anyway, let's get into the financials to start off today. So, um, software platforms is what they do, central operating systems. Basically, they are a tech company to dumb it down as much as possible. So cost of capital is at 11%. Target price is at $36. Now, to be fair, if you look right here, I don't know when the last time my software that I use has updated their target price, but $36 was only a couple weeks ago. And since then, they have released a phenomenal earnings report from what I can imagine. I mean, it has to be phenomenal if it's being paired with 39% in one day, followed by continued growth. Sorry, I'm zoomed out so far, but another 12 or so percent the next day. So I'm going to do the zero there because I'm sure at this point now they are most likely over their intrinsic value. But at the same time, I'm fairly confident that that value will be growing in the future. I can't imagine it not growing more, to be honest. Let me zoom out a little bit for you. Um, so sales growth looks really strong over the past few years. Operating income just turned positive last year, which is great. Net income, I'm guessing the same thing. EPS looks good, and total shares, hopefully not too much dilution. Um, it looks like they have been diluting a fair bit. However, just based on where their sales growth is at, I really don't think that's too big of a deal. Let's check out the balance sheet. Hoping to see some good things here. Oh my God. Almost no debt at all. Cash looks great. Assets are increasing a lot. Short term is nothing. Long term is nothing. Do they have some retained earnings? It looks like so last year they increased from the year before, but overall retained earnings isn't too crazy. Now, again, just to note, as I've been going over this in one of my classes recently, retained earnings is not how much money you have. It is just basically a tally of net income over the life of your company. So, like, for example, overall, in the entire life of their company, they have lost 5.6, this should be billion, 5.6 billion throughout the life of their company. Now, does that mean that they suck? No. As you can see, it increased by 200 million or so over the past year. I'm sure if I go into quarters here, it will be even better. I'm very confident it will be better, but as you can see, it has been increasing every single quarter for the past 4 quarters. Now, does that mean, oh, they lost $5 billion last quarter? No. That means over the past 4 quarters, they have made 400 million more and retained that within their company. This is just a running tally of a number. It's not how much cash they have. So A lot of people don't understand that about retained earnings, but that's also why I only have it weighted as point 0.2, 0.02, because it's not, it's a good thing if a company does have positive retained earnings, but it's not the end of the world if they don't. A company can have negative retained earnings and still be very successful. So overall, operating cash flow looks really good. Oh yeah, just getting into the cash flows now. Looks like they have been purchasing a lot of investments, which is nice. Financing, again, isn't the greatest for them. They've been issuing a lot of stock. And then for free cash flow, it looks like they've been doing pretty well. So use of cash, let's get into that. Again, we should see basically nothing in the debt column because they just don't have any even significant amount of debt at all, which is fantastic. And then again, they have not been repurchasing stock, which isn't the best thing in the world, but it's not the end of the world either for them, at least. I'm sure they probably will start soon as they are now net positive. They have no debt. They're profitable. I can imagine it's going to be starting to be reinvested soon. And for the ratios, let's see. SG&A to sales is really, really high. Now, as you can see, though, it has been decreasing. It's under 100% now, and it looks like it's going to continue decreasing. That is where their profit has come from. They've been reducing their SG&A to sales, which, again, SG&A to sales is basically just other expenses that aren't operating expenses. So it's really, really nice to see that that is going down significantly. The 5-year average is 117. They're below 75 now. So I'm going to put that at a 0.5 because that is still a very, very high SGA to sales. If we go to the quarters, I'm sure it'll be lower over the past few. So you can see they're at 67 now. That is still really, really high. Now, for a software company that's really, really fueling growth, that's not terrible, but it is still a very high SGA to sales. So for their net margin, we're looking at just going positive after increasing or improving significantly over the past few years. That looks good. ROA, ROE, same story. And then long-term debt to total equity is probably, basically nothing. 5% is fantastic. So overall, 77%. Now, one thing to note is that it is a 77%, but the places where they got points off is not the most important things in the world, like retained earnings, total shares. Now, total shares is one of the more important ones because it does mean they are diluting, but also that relates to the financing cash flow and the repurchasing of stock, where they're all related to each other, but it's not the end of the world that they aren't doing that. So although it is a 77%, they are still performing very, very well, which 77 is on the higher end of stocks that I have rated. So again, that's fairly good. I would say anything above a 70 is considered very good. Anything above a 60 even, like Dollar General's right at a 60. Enphase was fairly financially solid. They're above a 60. So anything above that is fairly good. And you can see Palantir is in the probably upper third of the companies I've done so far. So pretty solid. Let's get into their earnings. Hopefully we can see some excellent growth, which I mean, obviously we're going to because it was just amazing, their last report. So just going through it, let me zoom in here. So commercial revenue up 54%, government revenue up 40%, operating margin beat expectations, adjusted free cash flow was solid, deferred revenue was under, but deferred revenue isn't exactly the most important thing in the world. So although they missed on that, that could also mean that they just didn't defer that revenue. But billings look like it came a little bit under, and customer count 39% year over year is crazy, especially for this kind of a company. Let's see if we can find some more company specific information possibly, or will this just be the same thing? So this is more of just a rating of the stock movement, things like that. Also, some analysts, if you want to read through some of these analyst comments, you can. One thing to note, price targets being raises is very, very good. So Target raised from $11 to $11 from $9, which is crazy to think of considering it's at 61 at the moment. But I guess they're not exactly the most confident people, but Target raised to 57 from 45. So right now, I would say, as well as probably most people would agree, it is now overvalued. Now, pause here if you do want to read the rest of these, but I'm going to move on. But you can kind of see here, if I just outline it, their sort of trend of growth right here. And actually, let me do one better here. You can see the trend of their growth going through this channel here. They have completely broken out of it. And don't get me wrong, they could continue breaking out of it and maybe add more of the intrinsic side of value to their company. But for now, I think we're going to see a return somewhere to the maybe 35 to 45 range, probably within the next couple months. I can't imagine them going too much higher. Again, just better than expected financial results, strong demand for AI tech, which they are involved in. I'd imagine this next earnings report, hopefully they see some really, really solid material gains that will definitely help their intrinsic value. But for now, I'd imagine they'll probably drop back down short term. I really don't think there's much more room to grow here. Although, again, they have seen huge numbers, revenue increase 54%, customer count 39%. So don't get me wrong, this could continue. But just in terms of where the overall value is, I would say fair is more towards 35 and 45. Again, do your own research on this. I am not licensed or qualified to give anybody investment research. I'm not telling anybody to buy it or sell it, but that is just my own entertainment worthy opinion. So at the end of the day, I think that's it. That is Palantir. Hope you enjoyed. Hope you learned something. Make sure to subscribe if you haven't. I think like 90% of people who view my videos aren't, which is fine. But make sure to subscribe, and I will see you next time.